What's up, everybody? You know what it is. It's Wherever's White.
You know what it is. B. Smith in the house. Choo choo.
About to ride this fucking train. Choo choo. All right. What's up, guys? You know what time it is. It's Where It Was Right, Where It Was Wrong. And we got a special week of Where It Was Right, Where It Was Wrong. Stockwatch Sunday did not disappoint. If you guys tuned in the last Stockwatch Sunday at 7:30 p.m. Eastern time and took advantage of any of the stocks that we put on that list, you were in the green. And no more evident than Square. That was the first stock we brought to you guys last Sunday. We said that they were going to beat earnings. I said that they were going to come in and crush them. I was a little bit overzealous, but hey, that's all right. I said, oh no, I'm sorry. This wasn't the one yet. We'll get to the one that I was really overzealous on. But Square came in. Their estimated earnings were at 16 cents. They came in at 34 cents. I said that they were going to come in at 37. Fat Man Zoom said 25. They still absolutely annihilated them. And if we look at the chart here, this looks fantastic. I said months ago that Square was going to hit $200 a share, and it finally did it today. What an unbelievable move from this Fat Man Zoom. We love Square. This just only continues to move up, and I don't know where it goes from here, but man, I'm happy about this kind of move from Square.
Yeah, that 200 call was great. Their investment in Bitcoin, I think that sort of was like a force multiplier for them. They were first mover in that. And we saw PayPal follow along. Somebody was actually asking us about, taking profits. Man, I think this is a great long-term hold still, but if you've been green, it might be a good time to take profits. I'll tell you what, though, if you take those profits, I wouldn't be mad at you if you shifted it over to PayPal, because I think PayPal's gonna start moving. We see how they move in tandem. If one moves ahead, the other one tries to catch up. They both reported great earnings. They both killed it, and they have great prospects moving forward. So happy with that. Our first of many victories. So our second victory, stock number 2, where you were right. I guess where we were right was Peloton. Peloton reported shares of 20 cents per share. So the estimates was 11 cents. You predicted 35 cents, bit ambitious. I predicted 13 cents. We both said they were going to beat. As I said, they came in at 20 cents a share. What else can we say? This thing is a monster. It's been up and down. You'll go over the chart in a second. But the one thing I wanted to mention regarding Peloton was they said everything we needed them to say. Supply is the only issue, which we knew supply was the issue, but that doesn't matter for us. Like, demand is high. The Bike Plus, which is the one thing we wanted to hear, what do they say about Bike Plus? Are people going to buy the higher end one, or are they going to go for the cheaper one? And that's actually the one that is the toughest to get. So demand's really high for the Bike Plus. This is exciting. Peloton, given the supply constraints, and they're going to figure it out, the next 2 quarters should be monster quarters, and 2021 is going to be a great year for them.
Absolutely. And if we look at the chart here on Peloton, when we talked about this on Stockwatch Sunday, the stock was sitting at $109 a share. Even though it's pulled back today after running all the way up to 132, it is still up considerably from when we brought it to you guys on Stockwatch Sunday. So yet another killer winner. We like Peloton going into the end of the year and even into the beginning of 2021 because they still have things going for them. The demand and the struggle to keep up with demand, it's a problem, but it's a good problem to have. I mean, I'd much rather be in that situation than just having a surplus of inventory and no way to sell it. So it's a problem. I know they'll get sorted out. There's no doubt in my mind that will be figured out. But we have Christmas coming around, or the holiday season. We also have New Year's, which, I'm sure a lot of you guys know that there's a lot of resolutioners out there that will be inspired to go out to buy a Peloton. I'm sure of it. So there's 2 events there that's going to only keep demand high. So we like Peloton going into the end of the year and the beginning of 2021 as well. Now, if I bring us back here and we talk about the next one, which is Callaway, which has been one of the greatest mistakes that Fat Man Zoom has ever made and actually brought to our crew and to you guys. Callaway was supposed to have, or we thought was supposed to have, earnings 2 weeks ago, and then we thought they were supposed to have earnings this week. But it turns out now they're having earnings next week. We hope. They're coming out with earnings on Tuesday after hours. Is the official, unofficial word of Callaway, but it started out at $15 a share when we talked about it Stock Watch Sunday, has now gone as high as over $18 a share today. And this thing is going to continue to roll, I think. I think earnings are going to do well. We're going to talk about that probably a little bit on Stock Watch Sunday, though, as far as what to expect going into earnings, because there might be a little bit more volatility. But, man, this feels really good to kind of make a little bit of an error, but have it work out in our favor anyway.
Yeah, I didn't tell anybody to buy it. I just told you I was buying it, and everybody and their mother in the Chaos crew got in on it. And everybody should be in under $16 if you're in the Chaos crew, which means you're double digits percentage gains on this. We'll talk strategy and how we're going to play Callaway and earnings. We'll do that on Sunday. Great opportunity. And it pulled back on the news of actually them buying Topgolf. So which
we thought was great news.
Yes, we believe it was great news. So again, these opportunities, non-material pullbacks are discounts for stocks. And we talk about that all the time. Yeah. We felt strongly enough to do it over the live stream, but looking good on that one. The next one we have, this is, I believe, the one you were alluding to. Yeah. Roku. Roku reporting earnings on Thursday. Estimates were a loss of 40 cents a share. I had predicted loss of 30 cents. You had predicted a loss of 39 cents. Sorry, we were wrong. It's the next one. But we both thought they were going to beat. You know, the one thing we talked about was the digital advertising and the revenue that came in. And we thought that what social media showed us would that would do well for Roku, which is a little bit of a differentiator for us. Well, did it ever come in? They showed great growth.
Unbelievable.
They came in profitable of 9 cents. I mean, holy hell. And one thing we see, Brad, with stocks that actually beat earnings and become profitable, is there something about when there's an estimate of negative, even especially 40 cents? That's insane to be profitable that way. Yeah. They go off. And so that's exactly what Roku did, went off.
Yeah, if we look at the chart right now, it is screaming right now, up over $252 a share, up 12% from where it closed at yesterday before earnings came out. And, to be completely fair, I mean, this thing is up 25% since we talked about it at Stock Watch Sunday. That's an incredible number, but I just wanted to say that this wasn't a move that we were expecting. We were expecting them to beat and just kind of be, let's just keep rolling with it, especially because of what happened with Netflix. I mean, we saw just a huge drop off on active users on Netflix, and that was a huge cause for concern for us, even though we thought they would still beat. But man, this blew us even away. I just never expected them to come in profitable this quarter, but it is just an absolutely wild move for Roku. And, if you guys were able to get into this one, you should feel really good about it. I think eventually, if it doesn't happen today, maybe next week, there's probably going to be some sort of pullback that you may want. So you may want to consider trimming some off if you guys are pretty profitable on this. That's just what Fat Man Zoom and I would do, and the strategy that we employ. But obviously the decision's entirely up to you. We don't want to tell you that this is what you have to do, but it definitely, I think, would be a wise decision in our opinion to do so. Last but not least, it's going to be Wayfair. Now, Wayfair was the one that I said it was going to, I was just giving it the boldest of bold predictions, said it was going to come in at $3.85 a share. And their expectations were 80 cents a share. Fat Man Zoom said $1.20 a share. They came in at $2.30. So either way, they absolutely annihilated earnings and did really, really well. They had a crazy drop off right after earnings were announced on Wednesday and Tuesday, election day. And I ended up telling our mentorship folks, even the folks in the Chaos crew, that this was going to be a buy. This is actually on the watch list for the Chaos crew on Tuesday. If you guys recall, I thought this was going to be a really solid buy. Sure enough, it was. And we look at the chart here coming back, and we said it was a buy down in the 250s. It's now up over $300 a share. Unbelievable move for Wayfair. We think that there's a really good likelihood that Biden will probably get in, which actually only continues to bode well for home builders and housing in general. So this should do well. And I think that Wayfair, this is kind of just the beginning of where Wayfair can continue to go from here, because there's no slowing down in the retail space or the residential space as far as real estate's concerned. So like Wayfair a lot. Fat Man Zoom, comments on Wayfair.
Yeah, I mean, we saw this with Overstock. Overstock delivered.
Yeah.
Overstock moved, and we're seeing this. It's alluding to what's going to happen to the industry for the other stocks, so you can kind of get ahead of it. Saw it with PayPal and Square. We saw it with Snapchat and Facebook, right? The first one that came out, it alluded to what's going to happen in the space. So Overstock had a similar move. Wayfair, I would argue, is probably a better choice in that space.
Yeah.
And what they're seeing, it's always about forward guidance, and it's always about really outperforming, not just, blowing it out. And talk about supply and demand. It looks like the value of children is going up in the e-commerce, so Wayfair stands to benefit the most.
Oh my God, that's terrible.
Sorry,
Guys,
edit that out, please.
don't just leave it in.
Yeah, I was gonna see if you were paying attention. You almost let that go by you.
I was like, children, whatever. But anyways, listen, guys, we got them all right this time around. Usually we're the first ones.
5-0, baby.
First ones to admit when we get it wrong. We didn't get one fucking thing wrong this time around. And if you guys made some money this week, give us a thumbs up if you're a part of Stock Watch Sunday. If you want to be a part of next Stock Watch Sunday, make sure you're subscribing, hitting the notification bell, because we will be live again at 7:30 p.m. Eastern time on Sunday to talk about the stocks for next week. So if you want to be there, make sure you're showing up at that time. Fatman Zoom, what else you got?
Rocket on Sunday. It's a big Stock Watch Sunday, 7:30. Tune in for Rocket, because we're going to talk all the things.
It's going to be a big week, guys. We'll see you next time, Sunday at 7:30 p.m. Eastern time. And that's it. Have a good one.